If I can move down to Marc. Marc, Barrage Group, obviously as a developer, you have a unique opportunity of seeing a lot of investment grade infrastructure projects, pipeline across various sectors. Can you highlight a profile of those projects, and which do you think will be investor ready, particularly with regards to the best options investors would have to participate in these deals?
Thank you. So, if we take just one step back to see where Barrage is coming from. So it's a large PE platform present for more than 15 years in Africa. They raise funds, etc. And they have, as I said before, 1/3 of institutional money. However, when they decided last year to launch a new energy platform, it is because these energy assets in emerging markets fit very well institutional investors' appetite. So if we just summarize, I mean, energy projects are public goods based on demography, economic growth, with what we call the impact, which we used to call development projects for the last few decades in the continent. You have long-term predictable cash flow. You have contractual cash flow. You have no market risk in Africa usually because you don't have wholesale markets. You have inflation protected or adjusted return or cash flow, structured finance, and you even have some foreign exchange protection. In our PPAs, most of the time, you have a protection against US dollar or euro, except in a large market like South Africa, where you have a local base of investors anyway investing with their own currency. So if you put all this together, this is the dream of any institutional investor. Any pension fund who is placing money for their pensioners, they want to have this 20 years cash flow, guaranteed, contractual, etc. That's even why when we hear the word IPO for power assets, it's a bit strange because a power plant will never become a Facebook, will never become a WhatsApp or Apple. It is something which is quite well defined and very well designed for institutional investors. And this is the way the market grew, I think, in Europe and US at the beginning. So now, what is the issue we face when we go and try to fundraise from these institutional investors? Because on the paper, it looks good. Still, it's the risk perception for wrong or false reason, but this is what we are getting from the market. The political risk is the number one, always. So we have more and more political risk insurance product coming. Still, I think there is still some bandwidth limit. Trying to get a $500 million PRI is still a problem today. And it's also a bit, maybe a perception item, because we look at a Moody's study on all PPPs in all markets. We found that in OECD, default rates is around 5% of PPPs. You go in other emerging markets, Asia, Latin America, it is around 8% default rate. You come to Africa, it is 2.2% default rate. So in effect, Africa defaults 2 times less than OECD country and 4 times less than other emerging markets. Yet, people think it's risky. What is clear is that reaching financial close is more difficult in Africa, but once you reach it, project goes well. So this is the first risk, political risk and sovereign risk. The second one, I think, is construction risk. And this is really something maybe on which we need to work to get institutional investors in, because they all agree to come in project after construction. Actually, we are establishing a new vehicle to come to invest only after construction, because what people fear is to invest in a project greenfield. There is nothing, you have construction risk, you have first year of operation risk, they're not comfortable. So now we are slicing our investment in 3 phases. Development phase, which is what I'm doing. The normal private equity phase, taking construction risk, but we are putting another vehicle, which is what we call the yield co, but with the Standard Edison story, it's becoming a bit unpopular, but it's basically a vehicle which is not taking construction risk. And then I think we can make a link between our local commercial bank that can take a 4 or 5 years construction risk, and then hand over after 4 or 5 years after construction, hand over these to more institutional investors, risk averse for long-term operational risk. So voilà, this is basically, I think, what I wanted to say, that power project, I think, fits extremely well because of the PPA and so on. But still, we have to address these 2 risks that institutional investors see, political risk and construction risk.
Thanks very much, Marc.
Doing business in Africa. You can't afford to be without Africa Investor.